How to invest as a teenager in 2023. So before we get started, make sure to hit that like button. Also subscribes to my channel. 1. Gain basic stock knowledge. The first step for teen investors, and beginning investors is to learn the basics of stock investing. Without an understanding of investing fundamentals, you run the risk of quickly losing whatever little money you cobble together to start building your nest egg. The problem is that many of the resources for beginning investors are not appropriate for teens. These resources are simply not produced in simple language that teens can understand. 2. Identify investments appropriate for teens. Investment can range from stocks to exchange-traded funds to some low-risk assets, such as treasury bonds. No matter the investments, a teen investor under 18 years old can make his or her own investment. They need the involvement of an adult, typically a parent, to open a custodial brokerage account or to authorize the purchase of an investment. Details of how your parents can open a custodial account so you can buy stocks and funds can be found here. Best custodial brokerage accounts for kids. You may want to get started choosing stocks based on your own interests. By looking for stocks in which you have an interest, you are likely to be more engaged in trying to understand how the stock market works. Here are some hints about what to consider when choosing stocks as a beginning investor. 3. Learn what companies do. As a starting point, you should get a copy of the annual report of the company in which you may want to invest. An annual report is a document used by most public companies to disclose corporate information to their stockholders every year. It is usually a state of the company report, including an opening letter from the chief executive officer, financial data, results of operations, market segment information, new product plans, subsidiary activities, and research and development activities on future programs. 4. Get and use financial data. At some point, you will want to get more detailed information about a company's financial performance, such as how much money it makes, compared to similar companies in the same industry. There are many different types of performance measures, but you don't have to calculate them on your own. Many financial websites will provide the information you need, such as return on equity, earnings per share, price-earnings ratio, etc. All important indicators for how companies are doing, which you can learn in a stock market course. We use 3 main websites to get this data for any company we want to research. Before accessing financial information on any company, you need the stock symbol for that company. You should be aware that stock symbols don't always correspond with the name of the company or its products. For example, Coach bags are manufactured by Tapestry, Incorporated. If you want to invest in Coach, you have to purchase stocks in Tapestry, which trades under the symbol TPR. So it's important to do a little research about the products you want to invest in. This link takes you to the financial information you can get from Yahoo Finance about Tapestry, Incorporated. 5. Experiment with dummy or mock portfolios. Setting up a dummy trading portfolio is one way teen investors can overcome the fear of taking that first step in investing. There are a few sites that allow you to set up stock market games in which you can compete with your friends to see who has the highest profits in hypothetical portfolios you create with fake dollars. The sites tally up the daily portfolio values and rank them by usernames. Here are some dummy trading portfolio portals. 6. Choose the right custodial brokerage account for teens. Minors are not allowed to own stocks, mutual funds, and other financial assets outright. In some states, minors are defined as people younger than 18 years old, and in others, they are defined as people younger than 21. If you are a minor, you can make investments only under the supervision of your parent through a custodial brokerage account. Your parent will have to sign you up for a custodial account offered by an online broker. You would own the assets in the custodial account, but your parent would control the investments in it, hopefully with your help, until you are no longer a minor. Important considerations to choosing an online trading account include: 7. Avoid investment scams. If someone promises you a profit that is much higher than you can get by investing in the stock market each year, you should run unless you really know what you are doing or you don't mind losing your money quickly. One adage that you should adhere to is this: high profit in any investment usually involves much higher risk. Over the long run, the stock market will generally only yield you about 7%-9% interest rate, over the long haul depending on what period you are measuring. Yes, the return on the stock market can be extremely high if you invest in an index fund that tracks an index like the Dow Jones or the S&P 500. For example, the return on a fund that invested in an S&P 500 index fund in 2020 probably yielded about 16.3% profit. But in 2008, the return of the same type of fund was probably around negative 38.5%. So no one can promise you a steady return each and every year if they invest your money in the stock market. Anyone who tells you that they would like your money and that they will consistently get you a profit of, say, 12% each and every year by investing in stocks or in any other asset, for that matter, on your behalf is not being truthful about the risk they are taking with your money. We've seen investment offers that promise to pay sky-high interest rates for what are at best extremely risky propositions, and at worst, pure frauds. Here is a list of red flags that the Securities and Exchange Commission says should make investors suspicious of an investment offer. Teen and kid investors should avoid penny stocks. These are stocks of very small companies that trade below $5. Through penny stocks, stock investment scam artists typically hook unsuspecting naive investors. There is nothing necessarily wrong with the companies that issue these stocks. The problem is that because there are usually very few publicly available documents to give investors reliable information about the health of these small companies, unscrupulous brokers, con artists frequently use a lot of big words and technical-sounding phrases to impress you. But have faith in yourself. If you don't understand an investment, don't buy it. What do you think of my video? Let me know in the comment section below. Thanks for watching my video.